Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, July 23rd. Okay, guys, you ready for some good old-fashioned revenge trading? Because I am ready to go. I will explain that to you in a minute. As always, run this video at 1.25x. That'll increase your efficiency, and you'll be able to pause or stop, take notes whenever you like. Taking a quick look at futures. ES and NQ are up about 0.5%. Small caps up 0.75. Everything else looks pretty much flat. Oil, copper, gold, pretty much flat lining today. On the macro front, pretty quiet. We've got a flash PMI sometime this morning. On the earnings front, we've got a nice mix of companies reporting today. We've got Amex, Honeywell, Kimberly-Clark, Schlumberger, and Regions Bank. So I mean, that's a real nice mix of financials, staples, energy, industrials. So I think just watching those today would be give a real nice broad view of kind of where the market's at. Some marquee names, some good headline names. So take a look at that. And of course, we've got Twitter and Snap coming off explosive earnings last night that had really good earnings reactions. We can follow those to see how they trade, and we've got some bracket trades that we can go over, and I'm going to show you those later on in the video. So let's go over kind of where we're at. I'm going to try and do this rather quickly if you've been following along. Here's our US dollar chart. We broke this downtrend, but resistance has held up here. So just watching this really between 93 and 92 down here at the bottom. Until those ranges break, you're not going to hear a lot about the dollar. 10-year Treasury yields have been a real focus of ours because it's had such a direct impact on the regimes that are doing well. If we just take a look back, if you're new to the channel, we've got two basic scenarios here of when yields are falling versus rising. So you can take a look at that. And we've had a lot of whipsaw action. Now yesterday, or recall, let's see, Wednesday, Tuesday and Wednesday, we had yields rising, helpful to cyclicals and financials. And then yesterday, those yields backed off, and I mean, just like clockwork, they pulled the rug on IWM, airlines, banks, all that stuff. And we had said, you know what, we're going to hold off. We're not going to take the bait of, okay, everybody pile into cyclicals. And I'm glad that we did that. And really, what I'm going to do is I'm going to wait for a clear signal. And for me, that clear signal is this trend line on TLT. If TLT is rising, that means rates are falling. That's going to favor tech, especially the bubble tech. No earnings, but lots of dreams. The Cathie Wood names, if you will, ARC, DocuSign, Roku, Zoom, all that kind of stuff. That'll do well in a falling rate environment or rising TLT environment. A falling TLT environment will favor the cyclicals. So if we've got this trend line here of a rising TLT, which means falling rates, once we break that trend and get a sell signal on TLT, that should be very positive and point towards a more sustained environment for cyclicals to do well. So until I get that signal, I'm going to hold off on, piling into all those cyclical type sectors. Looking at our broad market breadth numbers, here is NYSE McClellan oscillator, we actually ticked down yesterday. Why? Because we had all those cyclical names were all red. So those kind of dominated what was going on. And then, so, that's fine. The rubber band is still on the stretched to the downside type scenario. So I think we're fine staying in our longs. NASDAQ oscillator here at minus 20. I think we're fine. I don't see anything here that makes me worried about being long tech. And really, guys, the extreme usefulness of the NYMO and NAMO oscillators has passed. What do I mean by that? When an oscillator is here in the middle, it's not actionable. The actionable levels are at the extremes. Down here like we were on Monday night at minus 80, or up here at plus 60, plus 50, plus 57, plus 49. Those are the levels where, the rubber band is stretched to the upside. The benefit of being long is diminished, just like the benefit of being short down here is diminished. In the middle, it doesn't really provide a directional value. So what I'm going to do is probably drop this off of our coverage, not for me, but for spending time on it, and wait till we're, either back up at extreme overbought or back down at extreme oversold. And then these oscillators become pure gold. So here's our even weighted SPY. As you'd expect, we took a tick down yesterday because a lot of the broader market was down yesterday. So, but still above the 8 and 20 day. So the whole scenario remains bullish. See, cap weighted SPY was up. Why? Because Microsoft was up, because Facebook was up, because Apple was up, because Amazon was up. When you got those five working, SPY is going to be green. And so we've recovered the 8 and 20 day. Now we're looking really to take out all-time highs. Today, I think you just key off of 435. If we can hold 435 and drive higher, you're going to be in good shape. The downside support that I see is 433 right here at the midpoint of the channel, and lateral support. So if we were to get a pullback to 433, I think you could buy it there, but I don't think that's going to happen. I mean, we're set to open a 0.5% higher, which of course will leave a gap below. Now, if they, on the open, it wouldn't be odd at all for them to, flash that gap fill and come back to yesterday's close. And then that would be a perfect chance to try a long, because, if you get long right at the open, that's a tough trade. If you're good at it, that's fine. But usually you kind of gotta, wait to get an objective level to shoot against. And I hate those gap opens, because you got nothing there to really go against. SPY 30-minute chart. Yesterday morning, we had this pretty well lined out. Honestly, we had this level here at 434.50 marked. They tried to shake us out and scare everybody until the bulls took charge back again, and then moved higher and took out this 435 level. And we had that marked on our charts as well, because yesterday it was the prior high. So anyways, so today, again, I think you're good to go long as long as we hold 435. Qs daily. Here's where the world was ending on Monday. We've gathered all that back and more, recaptured the 20 and the 8-day, and now we're trying to recapture this trend line here, and we're up about 0.5% in the morning. The same type comments apply. We're going to have a gap open this morning, and just take care with that gap and don't get trapped trying to get long. For most of us in the group, we're already long, so there's no need to try and get cute on the open. If you get a pullback this morning into yesterday's close, that would be a chance to add, or if you're not in, a chance to get long. I'm sorry, I did not adjust this chart. It slipped through the net this morning. Let's see what we got. Yesterday we hypothesized that this was a flagpole. This line here is the flagpole measured move extension. We made some progress yesterday on that. Here was this big red candle here was the scare everybody candle, right? We're gonna go up here, and then we're gonna come down, and we're gonna crash. We're gonna give it all up. That 362 held, and then the bulls reasserted themselves. So for today, I think you could either use yesterday's close at 364 or 363.50 to shoot against. So we're going to have a gap open higher, and then there'll be a gap below that will need to be filled at some point. And then just be aware of that. But if they come back down to 364 and fill that gap, I would take a shot at that long. Now, what I did yesterday, and I think I communicated this, I was long, what was I long? I was long QQQ 360s for today, yesterday. And I closed those, and I rolled all those higher up to 364. Now, just to bank it, and then but stay long. So I'm long the Q, so there's not a lot for me to do here this morning except just kind of manage that position. So let's move on to IWM. Here was the daily chart where we said that midpoint of the range was really important, and it got rejected there. And so what I feel real good about that is we had the pivot exactly identified. So we had this here, got to get through 22 and a half. Couldn't do it. So if you weren't in, you didn't get trapped, and it pulled back. Now I was in, and so I got clipped on that, but I recognized it pretty early and got out of that position, but not without getting clipped a little bit. So anyways, we had that pivot identified, and so here's where it was. I thought I was kind of playing this momentum here, thinking it would break out. Didn't do it, and then as soon as it pulled back away, I got stopped out. But then you can see what I really like and what I think I'm good at, and that you guys can lean on as active traders or swing traders, however you want to look at it, is it came right back to a pre-identified level here. We've got a large volume over price bar here, came right back to 218, and it held, okay? And then it held there the rest of the day. So now today, we are up pre-market. I told you we were up 0.75%. So we are up here pre-market around 220 spot 50. So if you're interested in IWM, you'll have to navigate that opening gap, just like we discussed on SPY and QQQ. I think what I'm going to do is, although it's a pretty wide distance, we got $4 from 218 to 222. I mean, that's a real nice day trade in itself. But for longer swing traders, more want to take a longer position, I would do one of two things. If you wanted to be long IWM and you got some kind of move back in here to 218 today, you could be long against 218 and then look for a move back up to 222. And if the market gods are aligned and rates start rising again, you're going to get this breakout. We're going to go higher. For others of you, and I think I'm probably in this camp, is let price thrash around in here. Let rates figure out what they're going to do. Then if you get that breakout of 222, then look for a more substantial move. And this may be a flag. Here's the flagpole. Consolidate, breakout, and then go. So anyways, those are a couple ideas for you. Here's the 30-minute chart. And I mean, this is beautiful technical action. We had a gap up the other day that left a gap behind, and price came right back down to fill it with support holding. So, I mean, that's what price does. It takes care of unfinished business. It decided that, what, I'm going to come back and fill this. We're talking like it has a brain. Price doesn't have a brain, but it's not like thinking, oh, I'm going to go back and fill this gap because I want to, blah, 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 blah. But that's kind of how the market operates. Gaps tend to get filled, whether sooner or later, they do get filled. So here, price got rejected from that important pivot level on the daily chart and then came back to support, filling that gap, so we can take that off the board. And now price will be up here at 200 with a gap below. So if it comes back down to 218, I think you've got a solid objective long there if you want to actively trade it. All right, here's my revenge trade, guys. Here's my revenge trade. I gotta guard against it today. I am feeling it. I sent you a note out 3 o'clock yesterday. I had a bunch of stuff expiring today, from Microsoft to Square to Facebook to Q's. God, I don't know how many things that I had expiring today. And so I'm thinking, like last night, you know what? Great run. I mean, we got most of this. We had all these levels identified. I was in it early, down here at 340, then rolling up, and just staying with this trend. But I'm saying, you know what? With all this stuff expiring tomorrow, being up 3 days in a row, having a great 3 days, and and I looked at options for next week because I think we are going to be bullish into next week, into these large cap earnings. I looked at the prices. I said, Jesus, God, they've got a lot of premium built into that, which makes sense. I mean, if you're going to play earnings on mega cap tech, they're going to make you pay for it. It's not going to be cheap. So there's a lot of implied volatility built into next week's prices. I said, you know what? I'm just going to play with the Qs. I mean, if Facebook and all these things run up into earnings, I'll be in the Qs, and it's not going to be as exciting or rewarding as if you picked each individual one that ran up. So I'm going to close out, and so I was feeling all good until 1 hour later at 4:01 or 15 minutes later after I closed. And face on the Snap earnings and the Twitter earnings, that they blew them out of the water. Facebook has gapped up at least $10. We'll find out today. And so, that's the psychology of trading. I mean, right there in a nutshell. You're on top of the world. You caught a massive move. You've had a great 3-day run. We nailed the low on Monday. We didn't panic. We, get out of your shorts, get long. The oscillators at -90 and -80. This is going to reverse. We nailed that. We got a 3-day run. And then 5 minutes later, you feel like an idiot because you could have made, I don't know how many thousands. I don't even want to calculate it. It's sickening. And I think part of the lesson is Snap and Twitter were not even on my radar as far as big influencers on Facebook. That's inexperience with the name. That is a hyper focus on technicals. That is defensive trading because you got weekly options that expire tomorrow. That's fraught with risk. We have some kind of down day today. That profitable position could be wiped out. Now, what I could have done is if I had been on the ball and understood Snap and Twitter and potential impacts on Facebook, I certainly could have rolled higher and just like a 1-day thing and, get something out of the money that would be like ultra cheap. You could have gotten, anything in here pretty cheap, Thursday for Friday. That would have been a cheap shot that would have paid huge. So that's all water under the bridge. So, I've got to mentally move on from that. And when I say revenge trading, I'm not, you got to resist that temptation of, being so pissed off at a missed opportunity that you go into tilt mode and try and get it all back by 4:00 today. That's not going to happen. I'm going to resist the temptation to do that. But that, put that in your, your hat. Know your stocks really well as best you can. Look into, the market to find out what the influencers might be, on earnings. And, I didn't do that. I didn't even think of it, to be honest with you. So that was an expensive, an expensive missed opportunity. I didn't lose a dime, but I missed out on a huge, massive win. So anyways, that was my Facebook experience. Little frustration with Apple yesterday as well. Right here, early on, we had this breakout. We identified 147.50 as an important pivot point, and then so I bought calls on this breakout here, and then it turned out to be fake. They faded it, and I did not. When I saw Microsoft working, when I saw Facebook working, when I saw Google working, when I saw Amazon working, and I saw this breakout in Apple, I bought it. And I wouldn't have thought that on a day where mega cap tech was really working that they would have faded that. But that's what they did. So that was a losing trade. It happens. So today, I think it's the same number, 147.50. I did look pre-market. It was trading above that. So maybe today was the, stair step higher, up, retrace, up, retrace, up. And so I think 147.50 is your number again. And remember today, guys, it's Lotto Friday. What's Lotto Friday? That if you have lunch money that you're more than happy taking a zero on, and you want to take a shot at something that's a runner, like an Amazon or whatever the name might be, and you get something cheap with lunch money, and they decide to run it all day, then you get a big payday. And that's why they call it a lottery ticket. But just remember, most lottery tickets you tear in half at the end of the day because they didn't work. So don't do anything stupid. Don't try and make $1 million today. If you want to buy a few calls on something with money you're happy to lose because you had a good week, then so be it. But just understand what it is. Tesla. Soggy day. Down 1%. I think Tesla, just by the looks of it, earnings are next week. It looks like it's going to run out of time. As far as a pre-earnings run-up, they could moonshot this thing today. Who knows? But anyways, I would still key off of, 655 and this trend line. We're currently below it. I wouldn't try a long down here. Just on a technical basis, you're below the trend line and you're below lateral resistance here. You got to get a break above 655 before you can get long. Now, if they recapture that, great. You can get long and look for 670 and 690, but it really hasn't been feeling it. You have to admit that it hasn't really participated like the other mega cap tech names. Here's an example of Microsoft got a double upgrade yesterday. I told you I was long 280s and got a good break, and they gapped it up. Here's the gap, and here's a flagpole that was formed in the afternoon. Once the gap up, it absorbed the faders or the profit takers and consolidated nicely in this flag. So today or into next week's earnings, you break above the flagpole. I got a measured move up to 291. So really nice positive action. And just how trader psychology goes. Chris is down here, got a move, then got a gap up. That's Chris being a good trader, right? You got a double upgrade while you were sitting in it. That makes you a good trader. While on Facebook, right, you're not in it, so you're an idiot. So luck runs both ways, and don't confuse being a good trader for getting lucky, because yes, you got to be in it to win it. And I got long here, as we discussed, because 280 was the pivot, and we identified that. So I got in on a technical basis, and because I saw positive order flow on Tuesday or Wednesday, and maybe it's those guys that actually knew the double upgrade was coming when they were carpet bombing calls on Microsoft for Friday. It wasn't because of the technicals, it was because they already knew what was coming, and then of course they got the move that they were looking for. So anyways, today you can shoot long against the high. That might be a good although Microsoft usually doesn't run real fast, might be a good objective lottery pick, because you got this flag in place, and they break above the flag, they could run it. And with earnings next week, maybe there's going to be a lot of people that want to position for that heading into next week. So I think Microsoft could warrant some special attention. I'm wondering why. Let me do something here. I had updated this chart this morning. I know I did, and I don't know why it didn't save it. Anyways, Amazon. This was the free 50 club, right? We said we wanted a breakout here above 35.90, and we said 36.40 was the target. We got it exactly, and so that was the free 50 club today. 36.40 is your pivot. I think you'll see a little resistance here at 36.70, but notice the price void. I think the real resistance is going to come in around 37.10. You may see a hesitation here, but I think this is going to be much bigger resistance in this area than right here at 36.70. Netflix, nothing to see or do here. This could easily go lower if you were all interested in a short. If you broke the low, if this is the flagpole down, the bear flag, and it consolidates and then it breaks down below 507.50, it could go way down here. But in this environment, I'm not really that interested in looking for shorts. I would rather see 515 recovered, and then you could try a long. But right in here, there's nothing to do. It's either 515 recovery or 507.50 breakdown. Google. Yesterday we showed this top of the range here as a pivot, got a nice move. So now it's all about taking out the all-time high, 25.80. If it can do that, then it's off to the races. If you got a little wobble here into 25.60, you can get long. But the real deal is Google's been so strong. I mean, just camp out long. Camp out long. Even on this Monday, I mean, it really didn't even do anything. It just came back to the 20. And I know this is all compressed, but we're well inside the channel. We're above the 8 and 20 and 50, we're above all the moving averages, and we got earnings next week. If you've been swinging this the whole time, just stay long. There's no reason to get out. So if you're trying to tactically trade it or get a lottery ticket today, you break out of 25.80, the prior high. No natural sellers above with earnings next week. Might be worth a shot. Semiconductors were knocked down yesterday because of Texas Instruments. I think you key off at 256. And then the big range that we've been watching is 258. If we can recapture 258, then we will have broken out yet again from this big trading range, and we'll be looking for 295. So that's that. AMD. We talked yesterday about 89.30 being a important level, and we gapped open, which was really interesting. We gapped open, and then the very first bar came back to 89.30. And I bought it there, and I said in the note, be long against 89.30, and that's what I did, and then it worked out. So we're up here at 91. There's some resistance here, but then open to 93. And Intel reported last night they didn't do so hot. Maybe that'll be a catalyst for AMD today. I've got AMD calls for next Friday, so there's nothing to do today unless there's a moonshot and I just want to take profit. But AMD has earnings next week. I will be out before earnings. I'm not going to hold. So, but anyhow, that was a good technical buy on my part to get that pullback into 89.30. So now today, I think a break above 91 would open the door to 93. Here's Snap. You're going to have a gap open this morning, and then that'll set up either a bracket trade for Monday, where we can bracket the price action and then go higher or lower. Or if you're an active trader and for some unforeseen reason they try to fade it, go back in here. But given the environment, given the strong earnings beat, I would be surprised if they tried to, fill that gap today. I think a more likely scenario is a gap and go on a longer term chart. But, we got to keep the downside possibilities on the table, because if you got a power fade from 74 to 64, you'd be feeling pretty dumb by saying, well, I thought it was going to go higher. Always keep the downside, because that probably short term is the biggest opportunity if they do fade it, to get $10 today or in the next couple days, because everybody takes profits. That would be a huge trade. So keep that in mind. And same thoughts on Twitter, although the chart is a little more choppy than Snap, where we've opened up at at the highs after this big consolidation. Twitter had a high back up here of 78, even up into I think it was 81. And you've got a lateral support here at 72.5. So you're going to have a gap. Let's see how it handles it. I would imagine we're going to go up and try to tag the prior high, but you've got a nice trend line here to shoot against as well. If you did get a pullback and a gap fill here, I think that would be a good place to try along. And then let's wrap up quickly. This is Texas Instruments, and I just wanted to illustrate a bracket trade for our new subscribers, new listeners. A bracket trade is when you have a gap and then you have following price action like the day after earnings. So this was Wednesday night, the gap down, and then this is Thursday morning, Thursday trading yesterday. And so what you do is you bracket in the price action, and then you set alarms on the high side and the low side, and then you wait. You wait for price to give you a direction. Is it going to break higher and then they run it up and fill that gap, or do they break it lower and then this comes back down here? And so that's why they call it a bracket trade, and that's a second day play. You don't try to do anything the day after earnings. You wait for things to settle out for that price discovery, and then you wait for price to give you a direction. So today we'll have, and there's a bunch of them, and I'll try to send you a note on the gaps, but there's a lot of places where you can find, gaps, gap up and gap down in the morning. But you've got Snap and Twitter. You got Sam Brewery that had $100 gap down, and there's some other ones as well. So plenty to keep track of. Let's wrap it up here. Longer video, but lots going on. I hope you have a good week, or have had a good week. And if you just remember, if you got frustrated or you followed me, God forbid, on closing out your Facebook, try and get your arms around it. You made a lot of money this week. I made a lot of money this week on those FANG names. We've been right. That's a long-winded way of saying that. We've been right. We timed that Monday thing perfect, and we've been riding this wave. It's a shame, close out Facebook, not realize what was going on, but that's trading, and we will absorb that gut punch and move on. So if you're new here and you like the analysis, hit the subscribe button and the alarm bell. I'll do my best to keep you loaded with actionable information to start your day and throughout the day. If you want my midday notes and stuff over the weekend, jump over to the show notes, drop your email in the, there's a link there to register. Drop your email in, it takes 5 seconds, then you'll get all my content right in your email box. Longtime listeners, I really appreciate your support. I appreciate you passing the link along to your friends, colleagues, traders, Facebook, all that stuff, and helping me grow the channel. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.